in some of these inner pockets, whereas prices don't move together, right? There is pockets within pockets. And so I always suggest people that, when they're going out there buying properties, they should look at a much more holistic view and filter it down like a funnel and keep doing that. Don't just assume that you can't buy there. You would always get, good properties, in some of these pockets where there is overlaps on pricing. Hello and welcome to Helpmebuy Property Podcast. This is episode 2 of the 3-part series that we are doing in relation to real estate outlook for 2024, where we are talking about lending mechanisms across Australia. We are going into a lot of details around macroeconomic factors in play. We are also talking about where the prices are supposed to rise fastest all across Australia. And we're going state by state analysis of each of the pockets where we would see the price rise in 2024. And we are going to go into a lot more detail discussing Queensland. Part 2 is all about Perth and Queensland, and we would be going into details around LGA, its suburbs, the market indicators, the lending market, and the whole data set. So if you are listening to the podcast, I will strongly suggest to jump onto our YouTube channel and look at some of the data repositories that Alex from HtAG is sharing. Stay tuned till the very end. Thank you. Let's look at Perth. And so let's dive deep right down into Perth market and let's start there. What are the key things? Where are the focus? What are the LGAs? Let's basically start there.
Sure. So I have a heat map on the screen, which is LGAs in Perth. And just to illustrate the point that I was making before, some LGAs are quite vast, whereas the ones in the Perth are quite small. So they're suburb sized. So when you're looking at the reason why I suggested that we look at LGA data in this podcast is twofold. One is that you can casting a wider net. So when you look at LGA data, the smaller LGAs that don't have enough suburbs in it, the data for those LGAs would not surface at the suburb level. This way, we're casting a wider net and capturing those markets in our analysis. And the second reason, if we did this at the suburb level, we'd probably come up with a list of maybe 20 or 30 suburbs for each market, and it will be really hard to list them all and memorize them all when speaking about them. Whereas LGAs, it's a little bit easier. We can come up with a list of 5 in each market and we talk to them and deep dive into them if we need to. So in terms of Perth, again, the topic of our podcast today is short-term growth. So the 2024 prediction, we're 2 months in, and it helps to essentially focus on metrics that are lead indicators for short-term growth. If I were to give you an answer on which LGA in Perth is going to come up on the top, I'd need to look at those metrics first. And this is where I haven't done any data prep, so I'm just going to use the platform and let it guide me and come up with an answer. So I have a heat map here. This heat map shows by default the current year growth. So you can see there's a bit of hotspot in Queenana. I hope I'm pronouncing it correctly, LGA, whereas other like inner Perth LGAs are a little bit less saturated in terms of the growth. We also have Rockhampton and Armadale that have showing the highest growth indicators. And so this is 1 year growth. Whether it is going to continue or not in Perth is best answers when you cross overlay those 1 year growth stats with lead indicators for short-term growth. So let me pick Perth from this list. So this is Greater Perth. I'm applying the filters there. And there are 1 LGAs in Greater Perth that feature in our data sets. And because we're looking at short-term growth, we're just going to look at most basic stuff, and we're going to use days in market stock layers. So if I sort by days in market, anything that has the least amount of days in market highlights most in demand LGAs in Perth. And this is where the growth is more likely to continue. I'm not filtering on price points because they're obviously different markets, different price point in Perth. So what we have on the top in terms of short-term demand is Gosnells, Nelson, Belmont, and Armadale. So those 3 and the rest of the LGAs, if you continue going down this list, is most likely to continue exhibiting further growth if you look at the demand side of the equation. Now, demand is great, but then obviously you need to cross-check that with supply. We have 4 demand indicators and 4 supply indicators. The first supply indicator that you wouldn't want to look at is stock on market. We use percentages when it's pressed, like on our reports, just because raw data, so 30 properties that are listed for sale, depending on the size LGAs, that could mean different things. So we apportion that to the total number of dwellings in that LGA, and we get a percentage. So the supply side of the equation here, it's okay. So as you see, Swan is color-coded, and it's coming up as orange, which is neutral range. But next to it, we also have another metric called inventory, which is months of supply. And the lower the metric, the better. As you can see there, they calculate green. So supply indicators and demand indicators for those markets seem to be pointing towards the imbalance favored towards demand as opposed to supply. Again, when you look at this data, and this is the problem that we always face, our customers always face when they begin doing this level of analysis comparing LGAs one to another, because there's so many supply and demand indicators and other indicators that they need to cross-check and relate one to another. They get into a state of analysis paralysis. It's a cliche term, but this is the first thing happen if you're new to property market research and you realize there's so many indicators that you need to look at. You spend maybe a day or two getting familiar with those metrics, and then you say, I'm ready to do analysis, and then you get stuck, essentially just because there's so many metrics that you need to. So here I sorted by dawn. If you sort by stock and market indicator, which is the supply side of the equation, you're going to get a slightly different answer. And the way to do this, to answer your question, is essentially try to come up with a balanced sorting mechanism that ranks areas based on all of the supply indicators and all demand indicators, and that will give you that. So there's a bit of additional exercise that we always recommend our customers to do. I mentioned the dawn, that is the demand indicator for the markets, but you have to consider other things as well. Hope it answers your questions. I'll give you the top 3 based on dawn, but there's a bit of further nuancing that you may need to do.
100%. And thank you for sharing some of this information. Look, I don't disagree. I think when you talk about City of Gosnell and you pick some of those from there, I think that makes a lot more sense in relation to Armadale and the amount of development that is happening there. There is Roy Highway and the logistic park in Kenwick and all of these areas. There is Mercy Care that is spending significant amount of money there. There is new defense facilities that is coming there. So there is a lot of infrastructure that is coming through some of these pockets to basically substantiate what you're seeing in the data, right? The other one that basically hits the park for me is this varied way of looking at information. So a lot of investors, when I'm on the ground in Perth, right, I see that there's a lot more activity happening on the fringes of Perth rather than in the core of Perth. Which is quite interesting from my perspective. And one of the LGA to look out for is the city of Coburn. While the yields might not be there, but you're talking about areas like South Lake or Spearwood or Success or Billier or Bibra Lake, where the prices are such that they have best schools in town. Atwell is another one where there is amazing dynamics at play on a local market perspective. And you look at the data, you see that there is consistent growth being coming through some of these things. And that basically comes back to the socioeconomic factors that comes in play in Perth typically. I think one LGA that is on my radar to look out for, and I'll say to people and any users and listeners who are listening to, and please do provide some comments, is the City of Swan. City of Swan is, if I go into a bit more detail in relation to City of Swan, you're talking about areas like Ballajura, Beachboro, Bullsbrook, I'm just thinking out loud, Chiara, Lockridge, some of these pockets in City of Swan, which is not inner city, but there has been some amazing growth coming out of some of these pockets. And so what I see is that as the affordability causes a bit of issues, a lot of homeowners are basically moving into that space. And City of Swan is basically north of Perth, just before Joondalup. And Joondalup is almost like a city centre for Perth typically. And so if you ask me for my 3 key picks for Perth for 2024, I would definitely add City of Swan in there as well, together with City of Gosnell and typically what you're talking about in relation to City of Coburn. Those would be my 3 favorite pockets where I'm seeing a lot of owner-occupier activity coming through, which is typically going to drive the prices up quite significantly from that 550, 600 mark, well over 700 to 750. So my expectations around some of these pockets are that you should see at least 8 to 10% growth coming out of some of these pockets.
Absolutely. I was just looking at the data as you were speaking. So Swan is definitely quite well positioned in terms of socioeconomic. So we have a socioeconomic metric called IFZ, which is 7 out of 10. All the other data looks pretty good, except for building approval ratio. So this seems there's a bit of new builds coming into the market, which could indicate more supply in the near term. Other than that, it's pretty good. And Coburn, by the way, also affordability. You spoke about affordability. So affordability in Swan is great. It's 95 years. It's below 30. That is the cutoff. And I saw very similar data in Coburn. Hope I'm pronouncing it correctly. So affordability index is also below 30. And this one actually, in my view, tops Swan. If we disregard the price point, I think the price point is a little bit different because This one has a higher socioeconomic indicator, and it has, what I was going to say, no supply risk because of building approvals. So they're neutral.
Definitely. There's a massive shift that I'm feeling that is coming out of people were quite actively investing in the city of Rockingham before, and there was a lot of activity around Mandurah, Warnbro, Safety Beach, Waikiki, all of those pockets. And you can see that those pockets have hit its maturity, and people are actually coming out of some of these pockets, or people are moving further away from Mandurah and moving more towards Falcon and Townsville or Parmelia or Kivana region that you were potentially showing there before. But I can see that while the investors have been focused there has been a price discrepancy between some of these outer pockets and inner pockets. And so if I had a choice, I would always go into better socioeconomic areas like Holborn and pay $600,000 there rather than paying $600,000 for example, Parmelia or Vellard. And so there is an interesting discrepancy that happens, and that typically happens because a lot of investors have blinkers on and they think that they can never get that in some of these inner pockets, whereas prices don't move together, right? There is pockets within pockets. And so I always suggest people that when they're going out there buying properties, they should look at a much more holistic view and filter it down like a funnel and keep doing that. Don't just assume that you can't buy there. You would always get good properties on some of these pockets where there is overlaps on pricing. Amazing analysis. Thank you very much for sharing. Let's move on to Queensland. I think my personal favorite, and I think you've put Queensland right at the top as well. There is a lot of activity in Queensland and Brisbane right now. I'll let you kick off. Tell me what's the story behind Queensland.
Yep. So you already know about the current hotspots in Queensland. So Townsville, Rockhampton, top in terms of investor interest. So those, in my view, are going to probably show the best results in the short term in 2024. But let's do a deep dive into the data. So I'm going to look at the whole of Queensland and filter on LGAs. Again, we can use a very similar approach here. And interestingly, I was looking at this just before. Both Townsville and Rockhampton pop up top of the list when you sort the data by just the key demand indicator, that is the days in market. So there is definitely an alignment between the multiple data points here that showcase that these markets are positioned for short-term growth. Again, got to look at other indicators. The most favorite ones that we use, so the most impactful ones that we use for short-term growth is stability and infrastructure spend. And we have data points for both of those. And if I cross-check the data market in this, LGAs that come on the top against the infrastructure spend, I'd probably, again, single out Townsville because it has 4,000 per capita infrastructure investment in that market compared to lower figures that we see on this list here, as well as stability index that is pretty good as well. So if I scroll to the left here, stability index to the right, it's 23 years in Townsville, which is well below the 30-year threshold. Rockhampton is another one, short-term growth potential, 24 years on stability, slightly lower infrastructure spend, but because we're sorting it on the primary demand indicator, which is days on market, it does come up top of the list when we look at Queensland LGAs statewide.
And so we've talked about the regional side of things. I think I have a love-hate relationship with Townsville, and so while I do agree that Townsville is definitely on the top of the list when it comes to the short-term growth side of things, we also called out Townsville when it first came on the map. My hate relationship with Townsville is, of course, the risk associated with floods and cyclones and all of that things that happens in majority of the Townsville, and you see the flood maps basically sits there, right? So how do you navigate through, and how comfortable are you as an investor taking that risk where it's a 1 in a 10-year event and it's not like a 1 in a 100-year event when you talk about Townsville typically, right? From a flood event side of things. I was on one of the other podcasts where the person said, but you can avoid flood risk by finding properties that are not in flood zones. And while I do agree that that's the case, understand that when it floods in some of these pockets around Queensland, the street level flooding is basically everywhere. So while your house might be slightly elevated and you might not be impacted by flood, understand that the house and the area would still be impacted by flood. And so my personal preference, while I still like Townsville, is basically staying further out from Townsville, maybe around Kirwan, where you are further away from some of these core flooding areas, just to provide a bit more protection and support to your assets, especially if you're doing a buy and hold and you're not going to just go in and out and do short-term trading on properties, where a lot of people tend to do that as well.
Absolutely, I agree with it 100%. And to your point, we only look at short-term growth indicators. We haven't spoken about risk, although we do have a metric on that, and it actually is on the screen now, and Townsville is rated 33 out of 100 in terms of risk, and the higher the number, the better here. So it's quite low in terms of percentile of what the likely risk is in that LGA. So if your strategy is long-term buy and hold, then you got to look at this risk score as well when you look.
Definitely. And if you talk about inner Brisbane typically, and so this is a much more of a regional view of Queensland. If you talk about metro, where do you see majority of the impact is? Knowing that Brisbane typically, if you talk about BCC particularly, there was a massive price correction that happened in BCC. There was a lot of reasons behind that, right? There was stamp duty issues where it left a really bad taste in people's mouth, where people were getting a double whammy for stamps and not stamp duty, the land tax issue side of things. I used the wrong words. So there was a massive correction with purely Brisbane over the last sort of 1.5 2 years, but you were seeing that market is coming back quite strong. And so let's talk a bit about the metro side of Queensland as well.
Sure, cool. So I zoomed into metro now. So this is Greater Brisbane GCC. So it's Brisbane LGA plus Ipswich, Logan, Somerset, Synchrony, so a couple of more LGAs that we show the data for here. Now, again, I'd like to preface that we are just looking at short-term growth indicator. If we were to look at long-term, then I'd advise to actually look at a metric that we developed called Capital Growth RCS that automates the analysis for you. So it looks at over 80 metrics and it ranks market based on long-term growth outlook. And this assumes that you have a strategy of at least 5 years where you buy and hold the property for that growth too. Now, since we're talking short-term, we're going to look again at the primary demand indicator, which is days on market in GCC or Brisbane. And we're going to try to cross-check other metrics when we look at that as well. So the first on the top comes on the top of the list of Logan. If we look at the price point, it's around 870K. Then it's Somerset at 630 and Ipswich at 720. So kind of the price range of $600 to $800,000 in those markets. This is where the short-term demand indicator is pointing. We're going to potentially see an uplift in prices in the near term. Now, let's also look at the supply indicators. So supply indicators look pretty good. So some and inventory are both in favorable ranges. One thing to look at, though, is socioeconomics, which is 4.3 and 4 out of 10, which is not that great for long-term growth, but since we're doing short-term growth, we're probably okay there as well. Lastly, building approval ratio, there is slight risk of larger building approvals coming into the market. So there's potentially new stock coming into the market in the near term in Logan and Ipswich. So if I were to look at Greater Brisbane, I'd probably single out Somerset just because it has the best balance of demand and supply indicators out of the other three that come up on the top. Yeah, there's obviously, as you keep going down this list, you're going to see more markets that may be interesting to deep dive into, especially when we're comparing Logan and Somerset and Ipswich. Somerset is a small LGA, whereas Ipswich is huge. Logan is even bigger. So within those markets, you're going to find other small markets that will give you different metrics, different thresholds, and so on.
My personal favorite around Logan is predominantly Kingston and Woodridge. Those are the two suburbs which would have a lot of ripple effect typically when you talk about Logan in itself. Ipswich, that development impact, that the pipeline for development approvals is massive. And so, yes, you have to be very careful there are good and bad sides of Ipswich. And so where are you going to basically focus on? And one of my favorite also is predominantly the Olympic Prison, because there's a lot of activity, there's a lot of development happening in that space as well. While I've said this out before, that the Olympics in itself do not play a big part in the growth side of things, while there's a stereotype that it does, I feel that the expansion to the Melbourne Airport and the Brisbane Metro and the Eastern Metro Corridor and the Gateway Motorway and the Bruce Highway, all of these massive infrastructure spending is going to basically open up some of these southern pockets and some of these eastern pockets of Brisbane where you would see some decent growth coming out. And yes, the price point is bigger, but you would see that because the prices have adjusted, they'll come back quite quickly as well. One of the interesting things that I've noticed, especially in the metro cities, when I talk about Brisbane, Melbourne and Sydney, is that there's a massive disparity between units versus houses. When I say units, I'm talking about typically townhouses with Torrance title. I'm not talking about apartments. I'm taking apartments outside of that analysis. And what I am seeing is that because of the affordability side of things, people are being priced out of some of these premium suburbs. There is a massive uptake on townhouses in some of these areas where they are almost like 50% of the house price and the land is not that low. Like you're not seeing 50% drop in the land size. And so my expectation is that because of these affordability concerns and people people's income levels not growing up, you would see a massive uplift in areas where the development approvals are not great and council is not pro-development. You would see these townhouses or these Torrens-style townhouses would take, especially in the established space, would take a lot of growth opportunity there as well. So again, you need to pick out your areas carefully, be in the right school zones, be in the best school zones. I know you collect a lot of information and data around school zones as well, but picking up those right pockets are quite important and quite the key when you're playing this strategy, especially changing your focus from established houses to established townhouses. While people who know me know that I don't support apartments and I'm not in a big supporter of units or townhouses typically, but there is a massive disparity and it's an interesting space to wait and watch and see as to what happens in these pockets as well. I'm talking about more premium pockets though.
Definitely. Yeah, we're noticing that disparity in our data set as well. And just to make things crystal clear, we've been looking at data for houses up until now. We haven't looked
Definitely.
And we always separate the two because aggregate data, there's always kind of an average of an imbalance values. If units are cheaper, houses are more expensive, then the averages will be pretty much misleading when you look at the data for this.
There are three key regions that I would want us to basically talk really, really high level on as well. I know we've talked about Townsville, we've talked about some of these smaller regionals as well, but there is, I saw one of the graphs that you were pitching, especially at the start when we were talking about areas of interest and search figures. I saw Gladstone, Maryborough and Yeppoon that basically sticks out there as well. And so those are the markets to definitely watch out for this year as well. While Gladstone is known for the volatility, the numbers are basically quite interesting to watch and see when you talk about Gladstone, Yeppoon and Maryborough.
Yeah, you want to deep dive into those? So
definitely talk about them. I think it would be great for users and listeners or viewers and listeners to basically have a bit of a feel about some of these small regional towns as well, because of course there is a lot of appetite around people investing in some of these regional towns as well.
Yeah, sure. Let's look at Gladstone. So this is where we can actually do a bit of deep dive into that LGA. I'm just going to find it right in the search feature here. Queensland. So this is LGA, this is suburb level data. Let's move to LGA level first. And yeah, this one's an interesting one because it's a vast LGA, but only a few suburbs have enough sales activity in it for us to provide statistics for. Yeah. So there's 17 suburbs, although the total list is probably double that in Gladstone. And since we're talking about cyclicity of the market, this graph that we have, which we call GRC, growth rate cycles, shows how the prices have evolved in that market for all the suburbs. So each line is represent one suburb in that LGA. And as you can see, they all move kind of in tandem when you're looking at the data in cyclical terms. There was a peak in 2021 and in 2023, it actually crossed the zero red line. So there's been a bit of a decline, and now it's coming to 24 where it's hovering around zero. So that the growth around zero, since we're getting that additional push from investor interest based on the other graph that I'm showing to you, is more likely to push it out of the negative territory this year, in my opinion. And so looking at other metrics, although they're not great, but those are not bad. So the socioeconomic index is 3 out of 10. It's not the worst, which is 1 and 2. Rent-to-owner ratio is 32, which is neutral, and affordability index is at 35, which is just above the cutoff of 35 for neutral range as well. Supply and demand indicators. Demand is trending, so the days on market is trending slightly down, which means there's increasing demand. Stock on market is flat, but inventory is also trending down, so there is an decreasing supply, which is a good indicator. Vacancy rate at 1.5, also showing a trend down. And the other supply and demand indicators, which are not that important, but still great. So building approvals ratio is 0.5%, which is neutral. And search index is also 3 and 4, which is neutral. So yeah, it looks like since we're relaying it with the short-term indicator from investor interest, I think this is going to show a bit of growth. But if we compare it to all the other LGAs in our data set, it's not the best investment location for long-term growth. Absolutely, I wouldn't look at that, especially because look at the risk scores. So the highest suburb with the highest risk score is 20, which is very, very low in relative terms.
100%. Awesome. Thank you very much. And this is us basically going into a lot more detail, looking at Gladstone and parts of its cities as well. Again, these are some places to watch out for. Anything that me and Alex are talking about are basically talking in very general sense. So if you want to go into a lot more detail, of course, get a subscription to HtAG or come and speak to my team and we can go into a lot more detail with you as well about what are the core pockets that we are focusing in, because we are keeping our analysis quite high as well right now at this stage. And that's it. Thank you, viewers and listeners. This is where we end the part 2 discussing Perth and typically Western Australia and Queensland in quite detail. Next week, we are going to go a lot more detail into Melbourne, Sydney, and Adelaide. We are going to still talk about the growth opportunities. We are going to bring out more growth charts. We're going to talk about infrastructure and the various markets to look out for. Thank you for listening to me. Stay tuned and we'll see you out next week.